Welcome to the Bulletin podcast.
Hello, everybody. Welcome to this week's episode of the Willy Brandt School Bulletin podcast. My name is Sabrina Zerat, and I'm a student at the Brandt School, and I'm the editor of the Bulletin podcast and blog.
And hello from my side. My name is Manuel Mollenhauer, also a student and contributor to the Bulletin podcast and the Bulletin blog. I'm very happy to welcome our guest for this episode. A warm welcome, Mr. Henning Gloystein. Hello.
Hello, thanks for having me.
Thank you. Let me give our listeners a little introduction of you. Mr. Gloystein is a political analyst and energy and resource expert at one of the most influential political advisory companies, the Eurasia Group. The firm advises companies and political actors and specializes in political risk assessment. What global risk could arise in the near future? What would that mean for political security and economic development? One of their key reports is the yearly Top 10 Risk Report, talking about global risks, which we will discuss later. Henning Gloystein has a years-long expertise in energy politics, as he has worked at multiple consulting and journalistic outlets to report on energy topics, culminating in a 9-year-long tenure as the editor-in-charge for energy in the Asia region at the Reuters news agency. Now, since 2019, he has come back into the consulting world and works on topics such as critical minerals, gas and oil, trade, or the transformation of energy systems around the world. It's very nice to have you today. And so for starters, I hope everything was right in the introduction. And starting question, how has your experience been so far with the Brandt School? And how did you become a Brandt Fellow?
Yeah, cool. Thanks. The introduction is all great. Thanks. Always feels a bit weird being introduced like that. But how did I get to Brandt School? Part of Eurasia Group, the work is that once you get into a bit more senior role at Eurasia Group, you are asked or at least encouraged to do some work at universities. And that is to keep interest in politics alive in the next generation who will lead us. Because, as we all know, and you as policy students will know this as well, democracy does not work if the next generation is uninterested in it. So you need to keep interest alive. So when I moved from Singapore back to Europe in 2021, I started looking around a little bit for opportunities in this space, and I'm half German, British, and we have a lot of established such relationships in the UK and in the US, so I didn't need to add to that. And so I decided, hey, maybe have a look around Germany. So I studied at Humboldt University a long time ago and didn't really see much interest in international relations. And then, more or less by accident, I bumped into Professor Goldtaub. So we started having chats a little bit about politics, about international relations. He's into energy as well, as am I. And he then one day said, hey, I have this student who's really bright, and you should have a chat with him. So I talked to that student, and he now works for Eurasia Group. He sits in Berlin. And I'm sure he doesn't mind being called. He's called after baby Jesus himself, so Jesus Antonio Renzulo. He's a Venezuelan chap and very talented. And he doesn't work for us full time. He's doing a PhD at the moment, but he works for us on a part-time basis. And so we stayed in touch. And then Professor Goldtaub and I, about a year ago, started talking a little bit more about maybe doing this a little bit more frequently and me maybe getting involved a little bit. I have to say here, I haven't actually done much yet. I feel a little bit like I should be doing a little bit more. So hence, I've been looking forward to this podcast. I've written a little text to you, but I've been there once. But I wouldn't mind actually, maybe, I don't know, a couple of times a year to actually be there and show my face.
Yeah, then we were pretty fortunate because we both attended your risk lecture last year on the risk of 2024 with Professor Goldtaub's global energy policy class. One thing that you, of course, talked about there was the big risk report you did. Do you want to briefly talk about that? How important that report is also for Eurasia? I think it's one of the main reports, right? And how you worked as a team. How does the work look like on such a big report?
Sure. Though the Eurasia Group's top 10 risk report is indeed our flagship product. It's the most famous product. It's usually released on the first Tuesday of every year. And what we do there is all Eurasia Group analysts, from the most junior graduate student to our president and owner, Ian Bremer, and all the practice leaders, me, whoever else, they all smash their head together for several months. It usually starts in September, so actually quite soon, until the end of the year. Of course, there's a lot of moving parts. Politics goes on, just, it doesn't pause just for us to have a little discussion, but we start thinking about forward-looking aspects of the next year in September, and then refine it as developments continue towards the next year. And then we push it out. Now, it is not the most commercially, it is not important for us. We don't sell that report. It's free. So you can, we publish it on the internet. So it's basically a bit of a PR instrument, because we don't spend money on advertisement or PRing. So this is the report saying, hey, this is the policy wonks at Eurasia Group, what they think about the year ahead. And then it's also a bit of an honesty test, because you can backlog all the risks for the last 10 years or whatever. They're all there, so you can see where we got things right and where we got things wrong. And we do get things wrong. It's very, we don't have a crystal ball. So it's a bit of an honesty test for us as well. But it's advertisement. And then we use that report throughout the year to regularly update how these top risks develop. That we publish to clients only. So we don't publish that. We just don't drop it on the internet. And we use that with clients and sort of, how things developing, let's say, on the economy, on the Middle East crisis, Ukraine, climate, and so forth. And we use these subjects then to talk to clients specifically and say, look, where do you think your risks, but also opportunities are? And it's very important to be aware, risk in the public is considered a negative term. But in political risk analysis and actually in financial markets, risk is a neutral term. Risk can be positive and negative. It's opportunity and danger. It's just a risk that can go either way, just like prices can go up or down or sideways. And this is how we gauge risk. We put political risk on a trajectory, positive, neutral, or negative, just like prices. And the way we gauge the risk for the next year, so let's say 2025, before I sort of recapture where we are in 2024, the idea is a risk has to be specific for next year. So we can't be saying we think at some point in future this event will happen and it will be maybe have a big positive or negative impact. So, no, it has to be a 2025 thing in this case. It also has to be base case, i.e. 50% plus. We can't just say, there's a slight risk that something might happen, and that would be really bad if it happened next year. That doesn't function because it has to be a tangible product. We are a for-profit organization, which means we sell risk analysis, and clients use that risk to make hard decisions, whether they are corporate clients, so companies that make stuff, whether they are financial operators who invest or divest, or whether they are governments who make decisions. So they need to have a tangible decision as okay, based on that risk, we do A, B, or C, or we do nothing. So it has to be base case, and it has to be next year, and it has to be impactful, as in like it needs to matter. So, on the extreme side of things, a risk for 2025 that we couldn't do, although it would be massively impactful, is like, well, if a meteor strikes next year, that would be pretty bad. But we can't make that a base case. So, and then on the smaller side, this sounds a bit dismissive, but we don't cover every country. So we cover about 90% or 95% worth of global GDP in terms of countries, but we don't cover them all. So, for instance, Denmark. It's a very good example, I think. It's a very wealthy country, lovely place. The political risk emanating from Denmark is near zero. It does have political elections. Obviously, it's a free democracy, and they've had a push to the far right or populism and then back to the left. Okay. But in overall terms, it doesn't really matter that much unless you live in Denmark. And even then, it's a stable place. So we don't get requests. But these things can change. Eurasia Group, until about 10, 15 years ago, didn't actually gauge political risk in the United States. And there's a big change, because now the United States, and it brings me to this year, has been on the top risk globally list of Eurasia Group for a couple of years straight now. In fact, for 2024, we have it as number one, which is kind of amazing given that we've got 2 live conflicts, actually, the world has more than two conflicts, but two really big international conflicts that are, in terms of human catastrophe and tragedy and economic impact, are enormous. That's the Middle East and Ukraine. But the US election we see as the top risk this year because the impact it has. Now, interestingly enough, that is an event for 2024 because the election is this year. But of course, the new president will only come into power in 2025, which means, well, I don't really know what will be the top 10 risks for 2025, but it's pretty likely that the US will still be on that risk list because whoever wins the election in November, president is inaugurated in January. Depending on what happens, there is a risk that things go wrong as they did last time around, during inauguration or slightly before and after. But very briefly, where are we this year? I don't think I need to go through all the 10 risks, but there's a couple of big ones that I think is worth updating for 2024 and the remaining months that we have, starting with the US, of course. Can keep that relatively brief. Now, there's been a big change, of course, that President Joe Biden has pulled out of the race for re-election, which, from a pure political analysis point of view, was good for the Democrats. Now, I have to stress here, Eurasia Group is nonpartisan, so we don't officially have any preference for any candidate. Now, in politics, it's difficult to keep that totally outside the realm. So our analysis is, for instance, that President at 2.0 Trump would be negative for the world. And a Biden or now Harris victory would have been slightly preferable. But that's not because we prefer them. We analyze the political situation, its most likely outcome, and then what the most likely result and the reactions to that can be. So Harris has vastly increased the prospects of the Democrats keeping the White House. We had Trump as the favorite over Biden, and now Harris, it's too close to call. Manuel, I saw your digital hand raised there.
I mean, you talked about how she would be preferable also in the way that I guess Harris' presidency is much more controllable in the area of risks. So I think Trump would just, the risk possibilities would explode probably. So you don't really know how to predict that in that much. And with Harris, probably it's more predictable. Is that also true then?
Precisely, yes. With a presidency of Kamala Harris, we know quite a lot. She's vice president right now. She is if you want to put it most boringly, a centrist politician with traditionally established US policy views that we all know very well. So we can say with almost certainty that she's very pro-NATO. She's fairly open market. However, she will probably continue, maybe even expand the protectionist and supportive subsidy measures that the Inflation Reduction Act, the IRA, that was introduced by Biden. So we know that. We know on energy and climate policy that she's more green in her policy approaches than Biden, certainly much more so than Trump. She would be very supportive of Ukraine. Trump wouldn't. And the thing, as you already mentioned, with Trump, we really don't know. He could suddenly do a deal with President Vladimir Putin of Russia. He could do a deal with Xi Jinping of China. He could do a deal with Mohammed bin Salman in Saudi Arabia and Benjamin Netanyahu in Israel. And then, lo and behold, it's possible that the war in Ukraine and the war in the Middle East might suddenly end, which, on the short view of it, sounds great, but at what cost? Because would that be if you start in Ukraine, would that be at the cost of 30% of Ukraine's territory and a long-term invitation by the Russians to have a go at some other neighbor? Now, we don't think Putin would attack a NATO or EU member in Europe just because Trump is in power, and Trump might not support, let's say, Latvia, which is an EU and a NATO member. We don't think Putin would do that, but we do think Mr. Putin might have a go at Belarus. And he wouldn't probably even need to invade that country. He might be able to annex it, and then suddenly you have another encroachment. So that would be a serious risk. In the Middle East, it's very difficult to say what Trump would do. It could mean war with Iran. It could be a very unstable ceasefire. We just don't know. So it goes to what you were saying with Harris as a president. We pretty much know what she's up to. With Trump, which is no clue. And trade, he would. That's one thing we do know. He would impose import tariffs on virtually all products, which is not constructive to global trade and growth. I'll put it that way. And it's inflationary, so for the U.S. economy, it would be quite painful.
So, speaking of risks in a sort of larger sense, what we were hoping to talk about in depth today would be the political risk associated with the energy transition. And it's not necessarily specific to 2025, but we were wondering what your take on that is. What do you say the most challenging political risks are? And we have some follow-up questions, but just starting with that.
Yeah. Okay, it's a long list of most challenging aspects of the energy transition. I mean, starting at the top, climate. Climate change is a major political, societal, environmental, and global risk now. It has been on the top 10 of Eurasia Group for a couple of years straight now. It will probably be on that list for maybe forever, at least in my life. Now, we can't just every year say climate change is a political risk. We have to, like I say, it has to be for next year. And it has to be base case. So we have to be a bit creative with water, stress, migration. So you can be creative there because it's a long list of risks, like I say, and it is acute. And there are some people in the camp of people who want to be quite slow in their climate change political reaction, who say like, well, but we'll cope with it. It'll be fine. And areas with temperate climates, I suspect, sometimes hope, and they tend to be in Northern Europe and North America, then say, well, we won't be that badly affected, will we? And immigration, okay, we'll cope with it. That is false thinking. We think, at least. So the problem here is it starts with the fact that, for instance, from a European point of view, including Germany, Europe is warming at twice the average global speed. So it is a major problem. Now, it might not be a huge problem in Erfurt or Oxfordshire, where I live, but it is also a problem there. Harvests get affected. More extreme weather is an issue, but principally in Europe, it's Southern Europe. So parts of, for instance, Italy, southern Italy, south of Rome, 40% of the land there is at acute risk of becoming a desert within the next decade or two. And the same applies to Spain. Now, these are areas that have for thousands of years had agriculture as one of their main products. If you can't do that anymore, the flip, and these are the tipping points, is incredibly important. If you just warm, for instance, Madrid or Rome by 1.5 degrees centigrade, is what we're trying to avoid, warming more than that. But let's say you go to 2.5 warming, you flip Madrid from being like Tunis or Beirut. So you're putting it into a desert land, and then you're putting that part of North Africa, for instance, into the middle of the Sahara. Nothing grows, and that is the risk. So all the people who live in that belt, which has historically been one of the most fertile places on Earth, not just in Europe but around the world, flips into a desert, and that causes migration on an epic scale, and then becomes a problem for Germany. And this is the same in North America. The migrational pressures, the scarcity of water, the same will apply in the Asia Pacific region. So this is an enormous problem, and it needs to be addressed. Now, luckily, we actually know most of the solutions to address climate change, and I don't say this only just to sound optimistic. We strongly believe in this. We know virtually all the technologies that are needed to decarbonize electricity generation, transport, heavy industry, and farming. And we know it'll work. Will it cost a lot of money? Yes, it'll cost huge sums of money, and politicians need to be honest about that. This will cost money. So in advisory terms, what we say is we need to spend more in order to avert higher costs and catastrophe later. And in the most brutal fiscal terms, you say we need to increase the capex, so capital expenditure now, so that the operational expenditure goes lower later. And this means spending more money now on decarbonization. Not only does that prevent environmental and political and societal costs from climate change later, but it actually brings down energy costs later, because clean domestic energy is better than imported dirty energy. And this is, if you boil all this down politically and economically to the smallest factor, if you are in an area like Europe, which relies on energy imports, so we are short energy for what we produce. We consume far more energy than we have. The political and economic signal of high energy prices caused by geopolitical tensions and hostile suppliers and the risk of climate change, politically and economically, that sends you the signal to invest into clean domestic capabilities. It's as simple as that. And whether you are in China or in Europe or in Japan or in Brazil, well, actually Brazil is an exporter, but anywhere else that relies on imports, it does not matter. That's the impetus here. And even if there wasn't, by the way, climate change, this would be the case. So I think it's a pretty convincing case. And this is where, when I said a bit earlier that political risk also includes opportunity. There is an opportunity here. There's also massive risk, that's climate change, and supply chain disruptions from geopolitics, Middle East, Ukraine, that's all energy related. But there are opportunities here to turn that crisis into a dividend at some point.
I was just thinking, because the next clear topic for me is the idea of critical minerals. You were talking about wind turbines and all of these technologies that are helping with the transition to renewables. The problem being that those are not sourced within the EU and whatnot. And so the idea of them playing a major factor in sort of this next stage in, I don't know what you would call it, I guess the energy transition. A lot of these supply chains are underdeveloped. For example, China essentially runs the cobalt manufacture and the supply chain for cobalt. And then you have things like Chile, for example, has essentially nationalized its lithium supply. What about those types of things in terms of potential conflict?
Yeah, it's huge. Okay, I didn't want to scaremongers huge potential conflict here. Huge change is happening, and some of it I think is quite positive, but there's some challenges here. And challenges is consultancy talk for problems. First of all, what we are currently in the early stages of probably one of the biggest changes in how global industry works since the end of World War II. Now, because of the energy transition and the war in Ukraine that caused such a shock in Europe and by extension globally, because the gas price went through the roof for everybody. Importers from Pakistan were literally cut off the gas market because the Europeans threw their AAA rated money at the market, so that Pakistan, didn't get the LNG it had on a contract, the gas, and that went to Europe instead. So, and the prices for Japanese and Korean and Chinese users went ballistic. So this shock, plus the energy transition, is forcing, again, the importers and the big manufacturers of this world and the import regions to rebuild their supply chains. And the thinking now is like, okay, while we have to do this anyway, might as well do it with an eye to the future of green transition and build them with partners who we really think won't turn hostile on us. And then you start looking at the list of materials that we need for the green plus digital transition. That's the other thing that's happening. There's a green transition and a digital transition, which is epic in scale and a lot of positivity around it, but it requires raw materials that we hadn't been thinking about that much recently. So copper, okay, it's an abundant material and we need for everything. So copper is kind of the new oil. But then you mentioned cobalt, nickel, lithium, graphite, and then the rare earth minerals (REMs) that are unpronounceable, most of them. Luckily, they aren't as rare as their term implies, but we still have to look for them. Then we have to build mining equipment, then we have to dig it out, and then we have to ship it to somewhere. And then, as you mentioned, Sabrina, you also have to process it. So there's a lot of work to do here. China, as so often, has been a little bit more forward-looking than the West in this. They saw this one coming, and so they dominate the processing of critical minerals and rare earth metals right now. Which, when everything is running smoothly, isn't a real problem. And most folks in Europe or North America or in rich countries around the world wouldn't want a metals or critical mineral processing plant anywhere near them anyway. It's really dirty stuff. But now we see these as strategically important. So we want to, in Europe, attract some of the processing. We want building supply chain contracts with Chile, which has copper and lithium, with Brazil, with Australia, with Southern Africa. So this is like a scramble. Just like there was a scramble for oil in the past, there's a scramble for critical minerals. All big industries put up lists now. Usually every couple of years they update them. What are the critical minerals that we need most and we don't have? And so we're having to build these. We're going to have to dig out more of this stuff. What does that mean? It means taking out water, destroying landscape in areas, mostly poor countries, not all, but mostly poor countries, taking the water into the mine out of local communities so that we can get the critical minerals that we want to make smartphones, electric vehicles, and fantastic power grids. So there's political charge in that. You are taking resources away from other places to get it to you. Huge problem. It also needs investment. You need a lot of ports that currently don't exist. You need a lot of ships that currently don't exist to get this stuff from A to B. The shipping regulation is changing because shipping needs to become cleaner as well. Shipping is a major source of emissions, so that needs to get cleaner, and it's really expensive. But in this aspect, I am cautiously optimistic because most of the critical minerals that we need for the green and digital transition are located in the southern hemisphere. And most of the demand for them to be processed and made are in the northern hemisphere. So if this is done well, this should lead to a pretty strong increase in south to north trade. And if this is done well, the investments should help countries where this is being mined, maybe also processed, so that you get additional jobs, so you don't just extract and run away with it, and create wealth on both sides of the supply chain. Now, I've said if a lot here because in the past, these if sort of caveats haven't always been realized well. The oil and gas industry is particularly has been particularly bad in this. I mean, if you look at a lot of oil production in poor countries in the past, it hasn't made those poor countries rich at all, actually. So this is something that needs to be addressed. But I'm cautiously optimistic. There's a lot of positive energy, at least human energy, going into this at the moment, and it's actually something we work on a little bit as well to ensure that the producer, as in the miner, the diggers, the investor, and the consumer, the buyer, who then turns into something different, into a product, uses best practice environmental social governance. That's the famous ESG standards, so that most people benefit, even if the actual supply chain costs more than it would otherwise. But that's long-term thinking over short-term instincts.
Yeah. We actually we've been in our energy class. We've been to a couple different experts and also consultancy firms and everything. And what you say, we have heard a lot that it's much more done on a partnershipy level nowadays, or it's tried to be on a partnershipy more responsible way of working together and trading together. But of course, there have also been a little, let's say, maybe power struggle to get access. We now see that the EU got their Critical Mineral Act, the US got the Mineral Security Partnership, China's Belt and Road Initiative was probably the first that really went into countries producing these materials and try to build up infrastructure. So the question there would be, how is the dynamic between them, and are there also partnerships building up between the critical mineral producing countries? Is there also some some counter to the three big players coming in?
Yeah, there's both. So you have let's start with the EU. They have taken a very cooperative trade approach to this. You can see this in other fields as well. The EU is the only big major power, if you can call them that, that actively seeks trade agreements, free trade agreements, comprehensive trade agreements, critical mineral trade agreements. So they do this a lot. It's the only superpower they have, regulation and trade. And because of that, the EU is cooperating with a few. So the EU and the United States have a partnership that was struck under current President Joe Biden. And then we get back to this big risk. If Kamala Harris becomes president, this would be expanded. And if Donald Trump gets a second run at the White House, this would probably fall apart because he is not a cooperative guy in terms of this is a zero-sum game. So there's one example. China, of course, is in a race with or against, however you want to term it, the US in particular, but also the EU in accessing these raw materials and processing them as well. China actively uses its power it has in the processing of materials and in the control of quite a lot of supply chains in trade negotiations, disputes with other powers. Now, this isn't, I don't want to blindly or sort of bluntly put China into the culprit role here of, oh, they use this. We have to keep in mind that the United States, and to a slightly less extent also the EU, has put trade restrictions on China. Semiconductor controls, actually just live now, maybe EV tariffs, and for sure the Chinese government subsidizes the electric vehicle sector. But we shouldn't blind ourselves in saying that the German or European auto sector doesn't benefit from subsidies. Has done and will continue to. So this, it's action and response. If you put a tariff on somebody, you can't expect them not to do anything. So this is where China is in a bit of a race with, especially the US and the EU, on supply chains. But then there's also other cooperative aspects to this. So probably the most established one is the European Union and Japan. So they both signed a free trade agreement in 2019. And if you read through it, which they kindly put into English as well, it is full about cooperation in green energy solutions, joint standards, supply chain securing, jointly, so that then you can make your product, and then Volkswagen and Toyota can compete in sales. But they need the same supply chain, so they cooperate. South Korea is in that sort of boat as well, and that encourages me always, because Japan and the EU are not natural trade partners and supply chain. You would have thought that way, if you're Mitsubishi Heavy, you talk to your suppliers in Indonesia, and then it doesn't matter what the Germans or the Spanish do, but they do talk. And this kind of works. And then you have also things like the Joint Energy Transition Partnership, GETP, which is an attempt at rich countries. This is led by Europe, but the US is also involved, at least for now, and Japan again, to help finance the green transition of emerging market economies, preferably those who also produce a lot of fossil fuels at the moment, so that you sort of give them an incentive to reduce their production in that and build new clean energy supply chain partnerships in return for access to those minerals. So Indonesia is a recipient of that now. South Africa was the first. Vietnam is, and Vietnam grabs the headline as being the fastest growing industrializing economy in the world, but it actually also is home to a lot of untapped rare earth minerals. And lo and behold, Vietnam and the EU signed a free trade agreement in the March of 2020, when everyone was locked in at home. They quietly signed one of those. So there is cooperation. And I mean, Emmanuel, you mentioned the Belt and Road Initiative, which sort of in the broader West tends to get sort of poo-pooed and wiped off the desk as debt enslaving. not everyone on the receiving end of the Belt and Road Initiative sees it that way. There's a lot of strong investment from China gone into a lot of countries, which have had a positive impact. Of course, China has an interest here. They want they want to expand their technology, sell their technology, and import resources. Sure, but the US or Europe has been doing the same. And yes, there is debt involved. And if you can't repay your debt, that normally gets into trouble with with the person who loaned you money, whether that is China or the IMF or the World Bank. Doesn't matter. So I would say the Belt and Road Initiative, it is an unusual approach that sort of with a Western lens on looks a bit weird, but it was the first and the biggest one to be launched in this field. And that's why it's going to be in history books, without doubt.
Very cool. On the question of are there also partnerships between the critical mineral producing countries? I don't know if I've skipped that in my mind, or is there also something brewing? Do you know?
A little bit. That's a good question because I mentioned OPEC in the oil side. That's they club together. It's a cartel. It's a term they don't like to hear, but it is what it is. They set production in order to manage the market. So there is sometimes talk about some critical minerals or countries that have a lot of important raw materials of the future to club together. And to some extent, the BRICS are part of this. That is the counter movement to the G7. It is smaller than G20, so where no one, you can lots of good photo opportunities, but little actually space to agreement. So BRICS is an attempt by roughly emerging market economies, the global South, to club together their interests. And there's some real heavy hitters in here. Brazil has, it has oil, it has got gas, it's got hydropower, it will have a lot of hydrogen. It's one of the biggest soy exporters. It's a long list. South Africa's in it. India's in it. China's in it. But this is where the problems start. China and India are not allies, to put it very mildly. So they are direct competitors for future power. They're also importers of energy. Saudi Arabia is in that club now as well. And Brazil and South Africa, so they're very diverse group of countries, if you want to put it nicely. And if you want to criticize it, you can say that this is a group that will find it very difficult to agree on things. And that's the other aspect. You can take other countries, like if you take Australia, South Africa, and Chile. So on all, the major continents in the Southern Hemisphere, they all have a lot of common natural resources. But to get them together and to form joint policy is very difficult because they're far away from each other. And they have politically and culturally totally different approaches and economically very different ties to each other. So it's difficult. So at the moment, we don't really see much of it. But that's not to say it won't ever happen. So for instance, South America, I would put high on the list where you could see a joint approach by, let's say, Peru, Bolivia, Chile, and maybe Argentina to just form this one together. In Southern Africa, you could see that as well. If, for instance, South Africa, Mozambique, Botswana, Namibia maybe as well, this would be possible. And then Australia, they can do whatever they want. They're rich and they've got all resources. And then, of course, in Indonesia, Southeast Asia, Indonesia is a giant country, but they could at some point within ASEAN develop some form of a Korean strategy. But ASEAN, sadly, I think I used to live there for a long time and got a soft spot for it. It has potential like the EU, but it's got problems like the EU on a much bigger scale. So they're not quite there yet, but never say never. And of course, the African Union exists as well. So maybe you're onto something. We're just not quite there yet.
Thank you so much. This is extremely informative, enlightening, really interesting. I would happily talk for another hour, but I don't want to do that for you and also for our listeners. But yeah, if there's anything else you'd like to add, I mean, is there anything that you picture working on with the Brandt School in the future? Anything you would like to talk about?
So this what we've last part of last sort of 20 minutes, we were talking about critical minerals, building new supply chains with an interest of having all parts of the supply chain, all partners with a positive outcome, I think is an important one, because and I'd be very happy to do follow-up sessions online or in person with the Willy Brandt School on this, because this is going to define whether we're successful in A, combating climate change, and B, rebuilding our industrial basis so that, positive products are affordable. Because we need to keep in mind that even amid climate change, we need energy to be affordable. When energy is prohibitively expensive, we can't have this conversation online. Literally the lights don't stay on, and human progress starts falling to pieces really fast. Energy has to be affordable and reliable, and in future also sustainable. And that part of the supply chain needs to be done, and it needs to be done in a better way, and not just in a way that we extract from some person or region or country to their detriment and to my benefit. So that's an important aspect, I think, that's it's worth discussing, and it's one worth trying to build a career on. And you folks who are at university, there's lots of good jobs in future there, whether it's making new products or policy advice or writing about it as a journalist. That doesn't matter. And so I think that's worth digging into and trying to have positive impact.
Thank you very much. Last one, just as our listeners might be interested in that, if they like the topic of that podcast, do you have maybe any possibilities of making an internship, as we in the Willy Brandt School always have to do one, or are allowed to do one? Is there a possibility to do that with the Eurasia Group?
There certainly is. It's a summer internship program, so it actually just ended quite recently, but it comes every year, and I'm actually in charge of it. So it's an annual internship that covers July and August, which I know not for all universities is ideal. It's actually politically not ideal either, because most politicians are on holiday in August, but it's just the way it is. It's paid, so we fully pay it, and you sit as an intern with either some of the regional teams, so Middle East, North America, South America, Europe, Asia, China, whatever your preference are, or the business development team, or some of the sectoral teams. So in my practice, energy, climate, and resources, or geotech, healthcare practice we have as well, yes. So and it's very competitive, but it's good. I mean, we tend to normally every year or two hire somebody directly out of that internship, and if that failing, we try and place those interns with clients. So we recommend them to some of our clients. So do look out for this. They normally go out in March, the advertisements for the internships, and I will try and actually be in Erfurt again before then to advertise this, because I'd be quite keen to get somebody from the Willy Brandt School into one of those internships. Has to be a good applicant. I can't just smuggle them in, but that's part of maybe the senior fellowship sort of helps do this. And so it would be fantastic to see somebody from the Willy Brandt School in one of those internships. They are either in London, DC, Washington, or Singapore usually, maybe also Brazil, because we have a big office there.
Oh, wow. That sounds amazing, actually. Thank you.
Amazing. Yeah. I think also like the regional teams will a lot of people will like them, as then they can also write about their countries here in the Willy Brandt School. So that would be sounds really good.
Yeah.
So I would very much thank you for sitting here with us and talking with us about these topics. Thank you very much, and also thank you to our listeners. This was this week's episode with Henning Gloystein from Eurasia. We hope you have a good week. See you. Bye-bye.
Thank you. Thanks a lot.